quick note before we start. This is information, not advice. So always check your own situation with the Social Security Administration. If you own your home, there is a real chance you are overpaying your property taxes by hundreds of dollars a year, and your county will happily let you keep right on doing it, year after year, without ever once saying a word. Because here is how property tax relief works for seniors. The break is real, it is written on the books, and it almost never gets applied unless you personally stand up and claim it. And this is not pocket change we are talking about. On a modest home, the right break can add up to real money every year, the kind that decides whether your budget feels tight or finally feels comfortable. Nobody at the county is going to mail you a letter that says, you know you have been paying too much, let us fix that for you. I am not a tax man, and I am not from your assessor's office. I am just an old fellow who learned, the hard way, that the property tax bill is the one bill nobody ever warns you about. So let me show you the breaks you may be missing, and exactly who to call to claim them. Now think about this for just a second. You work your entire life to pay off your home. You burn that mortgage, you finally own the place free and clear, and you think to yourself, good, now at least my housing is cheap. And then the property tax bill shows up in the mailbox, and it is higher than last year. And the next year, it is higher still. Property tax is the one bill that can keep on climbing long after you have stopped earning a paycheck. For a senior living on a fixed income, that is a genuine threat to the roof over your head. I have watched older widows living all alone in the family home watch that bill march upward until it took a real bite out of the grocery money. Nothing about their life got more expensive except a number that the county decided to set. People get quietly squeezed, year by year, right out of homes they already paid for in full. It is one of the cruelest math problems in all of retirement. And the worst part is that the relief built to solve this exact problem is sitting right there, going unclaimed, because it is opt-in, and nobody ever told you to opt in. The first break to ask about is called the homestead exemption. In plain terms, it lowers the value of your home that you actually get taxed on. Your house might be worth whatever it is worth, but the exemption carves off a chunk of that value before the tax is even figured, so your bill comes out lower. Many places offer a basic homestead exemption to anyone living in their own home, and then an extra one stacked on top for seniors. And here is the catch that costs people the most money. In a lot of areas, you have to apply for it one time, and if you never applied, you simply never got it, even if you have qualified for years and years. The good news is that once it is on there, it usually stays on, year after year, quietly saving you money you never have to ask for again. So the very first question out of your mouth should be, do I have the homestead exemption on my property, and is there an additional senior exemption I am missing out on? The second one has a funny little name. It is often called a circuit breaker, and the idea behind it is simple and honestly kind. When your property taxes get too high compared to your income, the circuit breaker kicks in, just like the breaker in your fuse box, and it gives you some money back, either as a credit on your bill or as a rebate check in your hand. It is designed for exactly the person getting squeezed, the senior whose home value keeps rising while the income stays flat as a board. A great many states have some version of this, and a great many seniors who qualify never file the one simple form to get it. That is a rebate. That is money in your pocket, left sitting on the table because of a piece of paper nobody told you existed. Now, I keep a running list of these kinds of overlooked breaks, the ones that quietly drain a retiree's budget, and the Social Security side of it is all laid out in my 2026 Social Security Playbook. There is also that free benefits cheat sheet linked right below this video. Grab whichever one helps you most. The links are down in the description. But stay with me, because this next break is the one that can change everything. And then I am going to tell you exactly who to call. The third break may just be the most powerful one of all, and it goes by names like the senior freeze or an assessment freeze. Here is what it actually does. Once you qualify for it, it freezes the value your taxes are based on, or in some places, it freezes the tax amount itself so that it stops climbing as you get older. Picture that for a moment. No more watching the bill creep up every single year on a home you already own outright. The number gets locked in place, and you finally get a little peace. For a whole lot of seniors, this one thing is what stands between them and being taxed right out of the house where they raised their family. Some places even let a senior defer the property taxes entirely until the home is eventually sold, though that is one you want to understand completely before you ever sign anything. And like all the others, the freeze does not happen on its own. You have to apply. You usually have to meet an age and an income rule, and in many places, you have to renew it. But the relief it brings is real, and it lasts. So here is exactly what to do. And it is far simpler than you might think. You are going to call your county assessor's office. Some places call it the assessor, some the appraisal district, some the treasurer. But the phone number is printed right there on your tax bill. You call them up and you ask 4 plain questions. Question 1. Do I have the homestead exemption? And is there an extra exemption for seniors that I qualify for? Question 2. Does this county or state have a circuit breaker or a property tax rebate based on my income? Question 3. Is there a senior freeze I can apply for? And what are the age and income rules to get it? And question 4, the most important one of all. What are the deadlines and what do I need to bring with me? Write down every single answer they give you, because these breaks almost always have a filing window. And if you happen to miss it, you wait another whole year and pay the full price the entire time. And do not let a busy voice on the other end rush you off the line. You are a taxpayer asking about your own bill on your own home. You have every right to every answer. So let me leave you with the heart of the whole thing. The property tax break is not a handout, and it is not some clever trick. It is relief that was written specifically for the older homeowner living on a fixed income to make good and sure you are not taxed out of your own paid-off home. But it is opt-in, every last bit of it, and the county is in absolutely no rush to remind you that it exists. So you have to be the one to make the call. Pick up that phone this week, ask those 4 questions, and stop overpaying on a house you already worked your whole life to earn. If this helped you, or you think it might help a neighbor who owns their home, hit that subscribe button and pass it right along. Because next time, I am going to show you why the smartest retirees claim their Social Security completely differently than the bank or the brochure tells them to, and why that decision was always yours to make, never theirs. It is your money, and it is your home. Let us go and protect both of them. I will see you in the next one.